Hi, welcome to the Market Alert for Thursday, 2nd of June 2022. There's a lot of news this morning, so let's get on with it. Stocks, bonds and Bitcoin dumped as Dimon doubles down on dour outlook. This is Jamie Dimon. Jamie Dimon is the CEO of JP Morgan, the bank that was fined $900 million a couple of years ago for the manipulation of the silver price. So he should know because he's generally instrumental in what's going on with the prices. JPM sees oil rising to $136 a barrel this month, depending on what China does, as traders bet millions on crude explosion to $200 per barrel. I wouldn't be at all surprised at all. Said this, and you can expect diesel to be £2 a litre by the end of the summer as well, due to holiday demand, etc. And the all-time high you've got to look out for is $147 per barrel. This was in 2008. Another headline here, no guarantee slowing economy will slow inflation. Absolutely not. This is what the Fed is hoping for, that the economy will slow and therefore there will be a natural decline in inflation. This will save them having to increase rates. Only time will tell with this approach. Looming price hikes on food set to hit Americans even harder this fall, and in the UK as well. There's a report out now showing that the average increase in food prices is anywhere between 16 and 37%, depending on those types of foods. And Atlanta Fed slashes second quarter GDP forecast as stagflation looms. So after this is yesterday's manufacturing ISM and construction spending report, which showed an increase. Natural gas prices have exploded thanks to soaring LNG exports to Europe. It continues to rise. And stocks and treasuries declined amid a firmer dollar and yields, and that's because US stocks and treasuries were pressured as the dollar and yields gained in the aftermath of the better than expected USM manufacturing PMI data, which is why you saw the silver price being allowed to move up yesterday. Right, today and tomorrow is a holiday for the UK in observation of the Jubilee celebrations. But the rest of the world, apart from Italy, the Italian markets look like they're going to be closed, but the rest continue as normal. The only one to watch today is the ADP farm employment. These are a precursor to the non-farm payroll numbers, which will be released tomorrow. So 115, not 130, 115 for the ADP numbers today is the one to look out for. Meanwhile, gold and silver ratio down a bit yesterday, purely and simply because silver was allowed to move up with those manufacturing and PMI numbers. And I think this is the crude oil chart. Yeah, there's your $147 per barrel. I'll just scrunch this up a bit and you'll see where we are in relation. If you remember, during the 2020 pandemic, let's just get rid of that, we had a minus $40 per barrel, which was unprecedented, never seen that before. Just shows you what they can do in these banks and institutions. But currently you'll see that we're around $112 per barrel, but that is $147 for crude oil. Okay, let's have a look at the Dow. And yesterday the market down, as we say, we've got those numbers out at 130. This sent the Dow into a tailspin from the open. But you can see in the daily chart we've closed below the 5-bar moving average there. We've got a bit of a support overnight at the moment. And you can see this in the 30-minute chart here. So the market moved higher to begin with. As soon as it got to the previous day's high, or in that range, the market sold off immediately. And it was a fair old move to the downside as well. So let's just do a quick calculation, see where it moved down to. So it moved down nearly 700 points in this move before the market found support. And we can see there that, let me just get rid of this. We can see that we had the crossover and the divergence, and you see the market oversold. And then we managed to retrace back there. If we just draw this in there, we came back to the golden ratio of 62% before the market then made another move to the downside, and this time retracing there to 62% once more, where the market became oversold on the downside. But overnight, so you can see the market's in a sideways move there, and it's important that prices hold above yesterday's low. If not, in the daily charts, you will see prices then moving lower. Let me just draw this in for you. We've got the 38%, which would be the first downside target there, where the market is likely to find some sort of support. Now, I've had a request by quite a few traders and subscribers about the S&P. So let's have a look at the S&P each morning as well. It seems to be less volatile and certainly more popular than the Dow. So I'm quite happy to add this into the analysis. So in the S&P, you can see it's very similar in its pattern to the Dow, which you would expect because they're both US markets. So again, let's just draw this in. And again, you can see there you've got 40.54 as the first downside target, 38%, and then at 50% you've got the 4007 and also the 20 bar moving average there. But in the 30-minute chart, again, you can see a similar thing that happened during yesterday's trading session. It was fairly quiet in the morning, and then it managed to move to the upside where it became overbought with divergence, and then the crossover, and we also had selling in that first 5-minute bar. Once we got back through the close, the market just sailed to the downside there as well, until, again, same as the Dow, we've got the divergence and then the buying coming in, stopping the down move and the bounce in this market. And again, you can see exactly the same thing, 62 back down, and the market sideways. Again, you want to watch the low of this market. All lows of every market at the moment are very important in making sure, well, hopefully making sure that prices hold at these levels. Very important, in particularly in the stock market, because you want to keep those rising lows. But you can see for the last couple of days there's been a lot of weakness where the market's broken the low in the smaller time frames and then continued lower. Meanwhile, in the German DAX, again, you can see that prices down yesterday, closed below the 5-bar moving average, down slightly on the overnight as well. Let me just draw in some fibs on the DAX. We're at 38% yesterday, and the 50 bar is at the golden ratio there as well. In between this, we've got the 50% retracement there as well, which would need to be taken out. But a bit of weakness there. We're making lower highs for the last couple of days as well. So let's look at this in a bit more detail in the 30-minute chart as well. There's the 30 minutes. So yesterday we saw the market moving lower. It then had a bit of a rally to the upside. We didn't see a great deal happening in the stochastics in the momentum until we got down to the 200 MA. We're in the oversold territory. The market retraces 62%. We've got demand here, seen by the D. Market trades sideways for 2 bars and then moves back up to 89%, just in time for the Dow to open with the weakness. And if you go down to the smaller time frame of the 5-minute chart, and this is where this occurred. So let me just go back to that 30-minute. I'll just show you how to trade inside of these bars. So in the 30-minute chart, you've got this retracement right on 89% retracement. So what's happening at the 89%? Well, have a look in the 5 minutes, and you can see it's overbought, and then the selling comes into the market. We sit on the DP, and then we break through the DP, and we follow the market down there. So you can see then the DAX being moved lower a good couple of 100 points as the Dow and the S&P move sharply lower as well. You can refine this by going into the smaller time frames of 1 minute, and I will record a few videos on this because it's absolutely fascinating. If you can actually get the situation where you've got everything tied up in the bigger time frames, it doesn't matter what the time frames are, you just go and have a look, you know where you are, you get your background of your market, and then just work your way down. And you can do this in a 1 minute chart as well. So let me just wind this back and just show you. So now in the 1 minute, you can see again that we're overbought, got divergence, and we then get a bit of a rally back. We get 100% retracement there, but once again we see the market then closing back and the market going short. And then you see the sort of the waves that you get in the market here, but it continues to move lower. And once you've timed the trade by using the smaller time frame, you've reduced the risk, and then you can move into the bigger time frames to actually trade and hold the position. So then in the 5 minutes, you're already in at this sort of level. Then you get the retracements, but you can hold it because you've moved the stop to break even, and then you can move into bigger time frames like the 15-minute, where again you can see that the bars remain red all the way through, and then the 30-minute as well. And then once you start to see some sort of support, you can do exactly the same thing as well. You move your way back down where it's overbought in the 15-minute, and then down into the 5 minutes. It's oversold there. I meant to say oversold in the 15-minute chart as well. Like I say, and then just work your way back down into the smaller time frames as well to take the profits. And let's move on. As time is pressing on, let's have a look at the currencies. And in the JPY, we've got the market moving up again yesterday, but came into contact with a bit of selling. And also this, it looks like an 89% retracement area as well. It's bang on 89%. So we could expect a bit of a pullback in this market. I'll just draw in some fibs to the downside there. So these would be the downside targets. I just remove those. So that would be the sort of area. Again, you'll see how the averages tie in with the fibs as well, allowing you to, again, take profits at these areas or catch a bounce in the market. 30-minute yesterday was a bit of a move to the upside. We came overbought. Again, I don't have the 5 minute setup in the JPY or in the other currencies. I tend to trade a bit longer term. But you can see there that we have the retracement and then the market moving low. But you can do exactly the same thing. It doesn't matter which market it is. In the pound, a bit more weakness yesterday, trading down to the 38% retracement. Got the 20 bar moving average there in the daily. Got the other targets as well. The dollar stronger yesterday because of those PMI numbers. And in the 30 minutes, you'll see that it only started to sell off and break down once the dollar gained the strength from those PMI numbers. And finally, let's have a look at the metals market. So in the silver market, let's start off with the 30 minutes because we were starting to see some weakness yesterday morning when I recorded the market alerts. The market bounced up to the 50 EMA and the DP, and then started to move lower at the general mid-morning. And then once the news came out at 1:30, the market sprang into action because, and oddly enough, moved higher with the dollar, which is a very rare event. But again, that inflation issue is still there and is going to be there for a long time. So they tried to bring the market up to the $22 area. The market failed here. And like I say, that's a real major area and an issue for the price of silver. But at the moment, it's trying to move back up to the upside once more at the moment. But we'll see at 1 p.m. When we get the fix, see if it has another run down towards the low. But at the moment, holding quite nicely there, as you can see in the daily, off that 50% retracement there, and also holding above the 20 bar moving average as well. In the gold market, a similar thing there, trading down to the 50% retracement, holding at the 200 MA. You'll need to take out these highs here and here for the gold price to move higher. You could draw some fibs in on the daily chart as well, just to, if you trade gold, just to see where these numbers are. I'll just take this one back to here personally. Let's just draw that in, and then you can see we're at 50% retracement at the moment for the daily chart of the gold markets. And finally, the dollar yesterday moving up strongly, as we can see there. looking a bit weakish overnight. Maybe just the threat again that the Fed are going to have to increase rates. Maybe next week, isn't it? We're due for an FOMC. If not, it'll be the week after. But certainly another increase coming this month. Okay, that's it for this one. It's a bit of a long one, but a lot to get through considering that the UK markets will be closed today and tomorrow, but the US markets and the rest of the world still open. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.